Before you scroll, listen very carefully. Most people think market crashes destroy money. That's wrong. Market crashes don't destroy wealth, they transfer it. And right now, that transfer is already happening silently. If you don't understand what smart investors do during a crash, you don't just lose money, you lose years of your financial life. If you don't understand what smart investors do during a crash, you don't just lose money, you lose years of your financial life. Stay with me. This might be uncomfortable, but it could save you. If you care about protecting your future, don't skip. Let me tell you a truth Wall Street won't advertise. Market crashes are not accidents, they are features of the system. Every crash happens for the same reason: too much confidence, too much leverage, too much people believing this time is different. Smart investors knows this. They don't panic during crashes because they prepared before the crash. Retail investors panic because they believed market only go up. If this already sounds different from what you hear on social media, stay till the end. Here is the dangerous line most people hate. If a crash scares you, you were never investing, you were gambling. Real investors expect crashes. They don't fear volatility, they fear being unprepared. Comment ready if you want to think like smart money. What most people do wrong. During every crash, average investors do the same three mistakes. They sell at the bottom. Fear forces them to lock in losses. They stop investing completely. They wait for clarity, which never comes. They listen to noise, headlines, panic tweets, and YouTube fear cycles. Smart investors do the opposite, and the different decides who get rich after the crash. If you have ever panic sold before, don't leave. This is for you. Let's see what smart investors actually do. Let's break it down clearly. They protect cash first. Cash is not trash during a crash. Cash is power. Smart investors hold emergency funds, avoid forced selling, keep dry powder of for opportunities. They don't time the bottom. Timing the bottom is ego. Smart money uses phases, not predictions. They buy in parts over time with discipline. They upgrade quality. Crashes kill weak companies. Strong companies survive and dominate. Smart investors shift toward strong balance sheets, real cash flow, business people can't stop using. If you have learning something new, hit like it helps this reach the right people. Here is another uncomfortable reality. The best buying opportunities always feel stupid when they appear. If it feels safe, the opportunity is already gone. Smart investors buy when news is negative, sentiment is broken, confidence is dead. If you want profit without discomfort, investing is not for you. How smart investors think during panic. During crashes, smart investors ask different questions. Not should I sell, but is this business broken or just the price? Will this company exist 5 to 10 years? Am I being emotional or logical? They separate price from value. Market crash fast. Value disappears slowly, if at all. Pause the video and think, are you reacting or analyzing? Let's see psychology, the real battle. Let me be honest, market crashes are not financial tests, they are psychological tests. The pain you feel seeing red portfolios, watching gain disappear, hearing everyone say, I told you so. Smart investors train for this. They limit position sizes, avoid leverage, accept volatility as the price of returns. Weak hands fund strong hands. If you can control emotions, money becomes easier. Here is the line most people realize too late. The biggest risk is not a market crash, it's being out of the market when recovery starts. Every major recovery begins when fear is still everywhere. Smart investors are already positioned before headlines turn positive. Don't wait for permission from the news. Let's see what you should do now. Let's simplify everything. If you want to act like a smart investor during crashes, stop chasing hype. Build cash discipline. Invest in quality, not stories. Buy in phases. Control emotions better than the crowd. You don't need perfect time. You need survival and patience. Remember this, market crashes don't decide your future. Your behavior during crashes does. Most people will forget this lesson, a few won't. Those few build wealth quality, while others complain loudly. If you want more no nonsense investing psychology like this, subscribe because the next crash will not ask if you are ready.